So the objectives for this module is to understand the purpose of financial reporting, to be aware of the implication of accounting standards on the ability of cooperatives to report relevant information, to compare the financial statements of a credit union and a bank, and to understand the unique accounting and reporting standards for cooperatives that are really not met through regular standards. So first of all, there's three types of accounting systems. This doesn't apply just to co-ops, this is to businesses in general. There's financial accounting, which is targeted towards users outside the firm. So that would be your audited financial statements that are published. Managerial accounting, so this is accounting information, typically budget versus actual information that's used inside the firm by managers to make sure that the company is on track in terms of its actual revenues and expenditures compared to what it had budgeted. So that's important, because if management sees that something has gone off track where they thought they would be, then if they're looking at their management reports every month, then they should be taking action early in the year before things get out of hand. Finally, there's tax accounting, so related to various government agencies and tax filing returns. So accounting standards for cooperatives. Accounting standards vary by country. So some countries have specific accounting standards for co-ops, whereas others, such as Canada, do not have sector-specific standards. Some countries consider co-ops to be in the not-for-profit category. In Canada, most co-ops would adhere to the accounting standards for private enterprises, unless they are publicly accountable, such as credit unions, and if they're deemed to be publicly accountable, you have to adhere to IFRS, International Financial Reporting Standards. When you're looking at standards for co-ops, I think it's important to recognize one size doesn't fit all. So the purpose of cooperatives is to meet member needs, not to be focused solely on profit maximization. Consequently, accounting standards that were developed for investor-owned businesses, whether they're using accounting standards for private enterprises or IFRS, they are not necessarily the best way for cooperatives to report their financial results. And we're currently leading a project at CR to look at development of an international statement of recommended practice for cooperative accounting and reporting, and there's a paper on this in the Module 7 folder. So the discussion board question for this module is, since the current trend among international accounting standards is to move towards global comparable financial standards such as IFRS, it could be argued that cooperative specific standards are not important. Indicate if you agree or disagree with this statement and provide justification for your opinion. Refer to the article by McCulloch in the folder, and you might also want to link to the IFRS website, and using the information from these sources to illustrate your point. So that concludes Module 7.